All right, today is October 26th, 2023. We are looking at EU, euro dollar on a 15-second chart. I'm currently running long and strong on this one, and we'll talk about it. The EU is playing games right now, so let's talk about all of that. I'll talk about this trade that I got in, I'll talk about this trade that I took, and yeah, let's do it. Let's go. Okay, so first things first. I'm on my sell side drawings and let's look at the higher time frame outlook. So here's our higher time frame, 1 hour chart, and we're pulling down, and I've zoomed out massively, right? So first of all, I want to point out all of these mitigations where we've had this mitigation right here. This is I believe this is higher time frame and lower time frame, this one actually. I'm not sure why I haven't got this labeled correctly, but all of these ranges, if you see that what they've mitigated, this black line here, what we've mitigated is a primary range, okay? And typically, or the way in which they want to work, move price down, is that they'll mitigate a higher time frame range, and inside that range is a lower time frame primary, in which case they'll mitigate that also. All right, and that constitutes a good mitigation, and one where you can sort of bank on it being one that you can sort of go for a break of structure, right? Now, let's just assume this is higher time frame plus lower time frame. I'm not sure whether I have it written correctly on here. I think I was going through a different phase when I did this, where I would just write higher time frame and then draw the lower time frame. Now I write it like this: higher time frame and lower time frame. And it's important for me to write it like this because you'll see in just a second, actually. But let's just say this is a higher time frame, lower time frame, which I'm pretty sure it is. Okay, I just haven't written it correctly. So higher time frame, lower time frame, good mitigation. Moving on down. The next time we break up above a range, we're creating another sell primary, and we're looking to mitigate what? Higher time frame, lower time frame. So we've done that. Okay, so that's another good mitigation. Here's another one: higher time frame, lower time frame. So this is important, right? Because of this. For example, let's say price has initiated down here, and we're right down here. Then, as markets pulling back up, you might be thinking to yourself, or you might have heard some other idiots talk and say, oh, we've got to wait until we're in the upper 50% quadrant, right? Or even more so, 25%, because these are the best trades to take. They're the most high probability and whatnot. And that could be correct, if I'm honest. It could be correct that they are the most high probability. But look at what you're going to miss out on. And so, with my understanding, the way I do things, I'm able to see when we have had the higher time frame. See, here was the higher time frame, and we've got that lower time frame in here. To like they match up as being that's a correct mitigation, and now we can sort of trade off of that for a break in structure down below. It's like continuation, and so that's just something I wanted to point out. And what's really the most interesting thing here is we've got a higher time frame only. We've pulled into this range. We've created a sell primary, which is really important. But what it's done is only mitigated a higher time frame. There's no lower time frame mitigation in here. The range that it touched right here is not. And you can clearly see that this actually didn't go over anything. Like the liquidity is all stacked above here. So what does that mean? It means that I believe that this is going to become cause, or it's being created for cause. Does it mean that it cannot break structure? No, it doesn't mean that. You see, because what it's mitigated is something transitional. And when we mitigate transitionals, it means we can, in fact, handle breaks of structure, but it just means that this is going to become cause for a certain period of time, just that we don't know when. The other frustrating thing about transitional order block mitigations is that we don't know when we're actually experiencing them or not, because we can't really guess and say, oh, that's a transitional, definitely going to break structure. I can't say that for sure at all. So this is why we've got something funky, is what I'm sort of saying, on the top here of the last known higher time frame mitigation on our sell side drawings, right? So now as we go over to our 1 minute on the sell side drawings, and I'm just going to sort of pull it back nice and zoomed out. Here's that higher time frame only. And what I'm looking for right now is for them to create a sell primary, right, like this one, sell primary, and then we can bob back into that range and have a higher time frame and a lower time frame primary mitigation. And that's exactly what we had here. I didn't take this as a trade. It just didn't look, it wasn't creating a sell primary, and it wasn't going over the top of anything. It was for that reason I didn't want to take it, although I did see it, spot it, and understand all of it. Okay, so that's one way in which we can get involved, is just by waiting for them to create that sell primary, and then mitigate both the higher time frame and the lower time frame version of that range, and then push down of the primary range, and then push down. Okay, so again, we've got like a primary range in here, high time frame, lower time frame mitigation, or potentially, I didn't even label these ones, but I'm pretty sure, because I got the arrow, these ones are in fact lower time frame and higher time frame, right? But you can see that we've now had another mitigation that wasn't sort of lower time frame, if you know what I mean. Like, look, this is a higher time frame block that starts from this low and goes up to this high. And here's the other leg to that starts at this leg here and rips up and then pushes down. So we can in fact say we've got a higher time frame and a lower time frame primary in the same exact place. But what gets me is that those ones I've noticed become cores. They're either two things, actually. They either become cores, meaning that's going to become liquidity, right? And we're going to be shooting over the top of there pretty soon. Or it's because this was a higher time frame mitigation. Well, if we zipped out onto 5 minutes, 15 minutes, this is going to look like absolute nothing. It's just going to look like one small bar that pushed out there. So it's nothing higher time frame at all. So for me, this is cores, right, in its most greatest form. So let's put a lovely little dollar sign. And that's really what I'm seeing. I'm seeing these sort of, I beg your pardon, this should be where the dollar is. This one looks like higher time frame and lower time frame, so I'm not sure if this one is cores. But look how close they are. They most likely are all cores. And so as we're pushing down, it's just funky. You know, the sell side of it is funky. We're creating these sell primaries, and then we mitigate them, high time frame, low time frame. So we can find an entry, but these aren't being stacked for reasons that I would want to sort of get short for very long, because it sort of tells me that we're about to sort of run them, really. These highs are all just sort of fabrication. Lies, really, is the way I see it. Like lies in the sense that we're going to take them pretty soon. This was a weirdo mitigation in here as well. Pushed up in here, mitigated this huge bar, big twin tower block up in here. And these ones were created during like spread hours, where it's like a slow period after New York session. And it's really bitty for a little bit, and then they sort of did these weirdo spike things. So that's a shitty mitigation as well, because it just mitigated that, and it went over the top, I believe. I think it made either equal high or it went over that. It's just a weird mitigation, right? So, and there was clearly no lower time frame. So I wouldn't have said high time frame, lower time frame to this. So I just put question marks because I didn't really understand it. Same thing here, transitional order block mitigation. Transitional order block got a break in structure, and then they immediately took it. So what could be happening, right? One thing that could be happening is that we're in a liquidated state, or rather down here. Where would it have been? No, I was going to say this could be a larger higher time frame initiation range, but it's not. This would have been the low, this would have been the high, and so we would have been expecting price to break down below this. So this isn't even an initiation phase going upwards. So there's a good chance we could still be coming for lower prices. It's just a matter of when they're going to do it, right? The one thing I did spot is there's a lower time frame initiation from here. So this one's in a liquidated spot. This is a liquidated area, and this down here is liquidated as well. So we've got 1, 2, 3, and that should initiate higher prices. It already has initiated to this point, but again, what did we mitigate? Higher time frame only. If we push left, higher time frame only. This looks like it could have been a range and a break of structure from here over the left somewhere, but it was not. I double checked into it, and this is not a primary range. Okay, looks like it, but it's not. And so I think this could have been created for confusion reasons. They want people to see the same patterns happening over again, over and over and over and over and over again, with just one slight difference. And I think that's just what creates confusion in the marketplace, and people don't really, know how to trade it. And so they might have some system that relies on something like this and relies on something like this, and it makes sense to them that they're going short. When in fact, we're actually going to go long and take out liquidity above that area. So my bias is long based on this initiation phase, got an initiation range, right? And the cells look shit. Not gonna lie, they all look shit. Look at how I've been explaining it. It's all sort of crapola, right? Now, if we jump straight over onto the buy side drawings, right, we can see. Let me pull out this a little bit. Here's a 4-minute chart. So I know this is going to look confusing. So we've had a really, really decent higher time frame mitigation right here. So I was always looking for this to hold at this point. And what happened was they went. Did they go below it? Let's have a little look. I can't even remember if they went below it or not. Yeah, they went slightly below it, right? Which meant they took out higher time frame liquidity, because that was a good higher time frame mitigation. And so now, as we're getting into it on the 1 minute, we can see that the mitigation line, if you draw this arrow left and look left, it is a new range that we haven't touched yet. It is a higher time frame range. There's a lower time frame range, so it ticks all the boxes for mitigation. And they've initiated, right? We've got this initiation range that's occurred. Again, liquidated state into another liquidated state, and they initiate away. And so what I was looking for this morning is continuation of higher prices from somewhere above here. That's really what I was banking on or looking for, because the cells just aren't interesting to me. The sell side just doesn't look all that good. We might have to create something new for me to get involved in the cells. In fact, we will. And that's okay. But I'm interested in that, and I knew we'd be coming back for this area here, because this is a transitional, right? If we pull it left, I think it should be looking more like this. So this was the last known sell range that was formed right here from this low to this high. This range was formed, price pulled down, mitigated what it needed to mitigate, and pushed all the way through it. So we're always expecting price to come back into this range, at least for a touch and a continuation. Right? That's sort of the MO here, I guess you could say. And so I was kind of like looking at this, and I got suckered into a trade. We'll talk about it in a minute over there. But, I've been sort of watching steadily. Once that trade failed and it pulled down to here, I've really been sort of studying this like an absolute hawk on a minute time frame, 15 seconds most of the time, sometimes 5 even. And what I found was that as it pushed down and did these mitigations, number one, yes, we pushed through a transitional, and you could always say that's higher time frame, lower time frame. But I wanted to see continuation structure, because number one, I don't know what the transitional is going to be. It could be up here that's going to cause it. It could be something else something higher time frame they might be looking for. But either way, when we get a reaction like that, I want to look at what happened between these points, A and B. And on this one, I believe, if I'm right in saying, we didn't actually create any buy primaries. You see how maybe there was one in here. I think there was. Actually, yeah, I think there was a couple of buy primaries, a couple of small ones in here. And so as I'm watching price come back, I'm watching how it interacts with these buy primaries. And it didn't do anything at all. It just ripped through them. Continuation sell structure. So there was no trade for me there either. Then we get this mitigation, a little push through this transitional order block here. And that's when I started to monitor and see that, oh, look, we've got higher time frame and lower time frame mitigations going on. Okay, so it's like buy structures finally started to kick in. And so that's why I'm looking to go long from this area, right? So I'm sort of monitoring what's going on, and saw that we got higher time frame and lower time frame and mitigations, and they're all holding beautifully. And then we got this big initiation, and I feel like, what? Who do I feel like? Fucking Superman, right? Oh, look at me, I'm already 5R up, right? Then we get the pullback, plus 5R by there. I could have taken it. On a shitty day like today with this kind of weirdness, yeah, 5R isn't a bad thing. And so one thing I've been talking a lot about is these green boxes that I draw. And what this represents is the remainder of the order block that can accept mitigation. You see, once this is put in like this and we've initiated away, this has formed, right? The cell primary has formed. But we haven't had what I call continuation structure, right? Continuation structure would be up here. So just so we all are clear, I've just got my 10R, so I'm super stoked. But just to finish what I was saying, we've put in the biprimary, and to activate a biprimary, to absolutely activate it in its fullest form, you need also a break of structure. What that does, break of structure, is it gives it added weight. So now when we come back to this range in the future, if we do come back down here, it's going to have a reaction. It just will. It's a biprimary that's broken structure. Okay, biprimary that formed then broke structure. It's a very high weighted event. And so this is what I wanted to talk about, and I absolutely left my stop fully open on this one to my 2-pip stop, and I did that for a reason, because I was understanding immediately as we got up to here. I already knew and I had this drawn on that we could come back and take some more from this area. Why? Because it hasn't bossed. Okay, it has not done a little break structure up here, and so until that moment, I'm not moving anything. There's no stops being moved. There's nothing, right? And so I've written this in my notes down here. Initial mitigation did not break structure. Did not break continuation structure. That's what I meant to write. We can accept more mitigation within the green area. That means we can pull back into this green area and still fire up. This checks all the boxes for a good trade. Okay, this one right here. And so as they're coming back into it, I'm not gonna lie, this is worrying, and I'm thinking, oh, they're just gonna take me out. I'm done. The trade's done. I'm thinking that the whole fucking time. Okay, I can't get my emotions fully out of it just yet. I'm working on it, but I haven't been able to just get them all out. And so this right here was it's a beautiful manipulation play is what they are. This is absolutely why the market does what it does all the time. Can you imagine people who have broken this structure or this structure here go and break even on a trade like this, only to get nibbled or just to see that their stop didn't get taken? But they'll be kicking themselves. And I'm going to tell you something. That was me a year ago. About a year ago, I was doing that too. I was kicking myself in the nuts because it was like, what the hell? Like, they're so screwy. And it's nice to be able to sort of keep one open due to understanding. Okay, so I just wanted to point that out, that this is a fully valid trade to keep open until we break that structure. And then when you break structure, yeah, sure, if you want to go break even, go for it. Personally, I don't touch them anymore. I don't touch my as soon as I've entered, I've got a stop loss, I've got to take profit, and I leave them. I found that's just the best for me. It's less stress. If your internet goes down, who gives a shit? If anything happens, who gives a shit? If you take a loss, who gives a shit? If you take a win, who gives a shit? It's just, it's that mentality of more sort of, whatever is. And so I really like that. I really like that. In fact, I had I had a discussion with a gentleman just the other day, and he was over at my house, and I was showing him a little bit about what I do, and he was like, "So you don't have like a special backup internet here or anything like that? You just have one provider?" I have cable internet, and I said, "No, like I absolutely don't need it. Like it's a myth." Back when I very first learned of Forex, there were people with T1 or T3 lines put into their house, thousands and thousands of dollars spent so they get the fastest internet, so they could click the button the fastest and all this, get the best ping and blah, blah, blah. Now it's absolutely of no interest to me whatsoever. I can trade off my phone connection, for crying out loud. It's just about placing the order limit most often, or market or whatever. It just doesn't matter. So anyway, that's that trade. And then let's talk about this one over here. This is my original trade. This one's a little bit more tricky to explain, but let's go for it anyway. Okay, so we had a higher time frame, lower time frame mitigation here, and it broke through this like last known sell range, which created, went off to create something, right? Went off, initiated up here. So I'm watching on the way back down. Nothing. didn't create a single like primary that I was interested in, or at least it didn't react out of one again. And so it breaks the structure down below. So, okay, so this one we can actually delete. It's of no interest to us anymore. But we're thinking, well, are we putting in this primary range from that high to this low? Is that what's going on? Because now we've mitigated it and we've pushed through. I'm thinking, oh, okay, continuation longs, right? So what do we want to do? Well, all the time I'm trying to create a primary range. And if we look left, the only primary range we could create from was using this structure over here. Okay, because there's no other structure. There's structure here, and then here's the next piece of structure, even on a 1 second. Okay, so that's important. So there's that structure. And so that means that the primary that's going to get put in has to come from this high down to this low. It has to be from this high. It could be, it could be from here as well, or it could be from here as well, since these are the highs. But this is the most recent high that before that break in structure. Yeah. So this has to be, if it's going to be the primary, it has to start from there. Pulls down, and so I then have to wait for a primary to form. Okay, like I'm thinking, okay, if this is the mitigation and this is the range that it's worked its way through the transitional order block, which it was, I need now a biprimary to form, which I got with a lower time frame and a higher time frame, and that's exactly what I got. Excuse me. Beg your pardon. Okay, so this is kind of okay. Let's go down to 5 seconds. So I wait for my biprimary to form, and I wrote biprimary. What did the biprimary mitigate? Shit all. It did a transitional. Oh, I'm gonna sneeze again. Oh, I can't sneeze now. Oh, it wants to come out, but it won't. Excuse me. All right. So anyway, creates a biprimary. I don't like the mitigation at all, but we yoink our way up, and I'm kind of thinking to myself, well, let's just see if price can, keep doing it over and over again. It gets down to this point here, which matches this high, and I'm thinking, oh, this is beautiful. It's just got to get through this range here, which is a little transitional, very low time frame, because it's showing me that we're higher prices, higher time frame, lower time frame mitigation. Here's a biprimary that's formed. I wait for it to form. They come back in, then they mitigate the high time frame and lower time frame mitigation within that primary. So it's absolutely a valid setup, right? But what was interesting is, and this is what I should have done, and I didn't, is I just entered immediately as soon as it took out that transitional range. I just clicked buy market, I think it was, because my stop was covered. So 2 pip stop, and I'm in, and we're initiating away. But what I should have done is waited, looked what happened between A and B, right? The initiation, and as it comes back in, what happened? Where do we mitigate and bounce off of? So what actually went on and occurred was we initiated away, up and away, got to this point here, and then started coming back down on ourselves. But we hadn't created any biprimaries at all. No biprimaries were created from this point to this point. What does that mean? There's nothing to mitigate. So if you're pulling down, there's nothing to mitigate. So as soon as it took out, where was it? I guess it was like below here. I was thinking to myself, I need to get out of this trade and exit the trade. And I never got sort of an opportunity to do so at a time where I was like happy with it, So yeah, we got this little sort of, I guess, an initiation here, but it wasn't much. I should have, in hindsight, got it out, above my break-even line. That would have been the best thing, because I wanted out. I wanted out of this trade. Not as soon as I got into it, but as soon as I realized what was going on, this was not going to work out for me. I could tell. And so price comes back, takes me out, blah, blah, blah. Okay, and then I'm thinking to myself, oh shit, well maybe what was happening was this mitigation here yoinked its way up, but couldn't break structure, continuation structure. So that means that this mitigation here is all the green area. Okay, so I drew my green area on. I'm looking for a whole rinse and repeat of all of that. I also had a biprimary down here, which would have been a really good mitigation that I spotted. It was really low time frame. It's beautiful, and it was within a bunch. 1, 2, 3, 4 biprimaries basically, or 3 to 4 in here, and a tiny little one in the middle. And I was thinking, oh, that would be a beautiful place to bounce, and they just ripped right through it. And so that explains that trade. Really, it wasn't really something high probability, I guess you could say. I took it just based on wanting to get in the market. I guess it was more FOMO, if I'm honest. If I'm analyzing it from a different type of perspective, I wanted in on the market, and I wasn't, willing to wait. Then, price comes back down, and we've already talked about all of this. But as price sort of initiated down here, and I saw this mitigation and initiation away, I was very keen on, sort of getting involved again. But I had to see how it reacted from those primary ranges that were formed in and around this area. I think there may have been one here, there may have been one here, and it just didn't come in. Last thing then I want to speak about is just say this, right? So, I said about it earlier. Some people say don't wait, don't trade anything unless it's in the lower 50%, lower 25, whatever. Look at where like the primary ranges were created. They're typically always usually created in this lower 50, but it doesn't always have to be that way. And so a lot of the time they will create primary ranges in the lower quadrants. And that I think is where other teachers or other people who are trading that methodology, that's where it comes from, because that's what they can see. The longer they stick at it, I think they'll see a lot more and start to realize why that is good, but it's not the gospel-y, it's not something you absolutely have to stick to steadfast. All right, that's it for today. We got our 10R. We're done for the day. One loss, one win. Very happy with that. And we'll be moving on. It's getting late. It's now 11. What is it? It's 10:54 a.m. PST. So no more trading for me. Where do I think this is going to go? Well, I was thinking my original target should be sort of some of this crap up here. If we go to our lower time frames, I was thinking like probably the most recent dollar sign where it was just a higher time frame only. I was thinking that's probably a good target. But I just didn't want to hold out for it just because of it's been so weird, such a weird couple of days for the EU. It really has. And when I say weird, I mean like the mitigations that they've been doing are absolutely terrible. Like really, it's sort of just more about manipulation is what it's been seeming to be like for me. And I didn't see much strength really from down here, other than this initiation range, right? But I was in another trade just the other day on initiation, and it only gave me 10R from a 1 minute initiation range. So it's not like it's the be all end all. But yeah, I could easily see us going over the top here. That could be a good target. Like I said, I'm just happy to be out the market right now and be flat because I just don't trust all of this I'm seeing. I'll let the market develop something else, a little bit more high time frame, and we'll get back to it tomorrow. See what the market presents. All right, love, peace out. Hope you guys are smashing it, crushing it, living your best lives, and enjoying a bunch of pips from the market. All right, catch you on the next one, guys, and peace out. Bye bye.